Hi traders, Nathan Bray here from ACY Securities. I want to put forward, is there a possible case for looking now at buying gold? So over the last few months, I've been very bearish both technically and fundamentally on seeing gold selling off. And it has done. And now we've reached this level from the 2020 levels technically around 1670, major support level in gold. And we are seeing, according to our senior market strategist Duncan Cooper, suggesting that it's finding some support at this key level. But I want to have a chat to you about the fundamentals. So what we've been seeing previously is, because gold, generally speaking, is priced, say, in US dollars, we've seen a really strong US dollar. We're being told that you've got a strong US economy. We're being told that inflation is either just transitory or it's peak inflation, so that's not a problem. But for whatever inflation there is, the US have been, the Fed Reserve, they've been driving up their interest rates to aggressively cut off that threat. So you've got that on this side, and you've got a rising US dollar as well as a rising bond price in line with the interest. So you're making, say, 3% interest, and you're in something that's going up in value on one side. On the other side, you've got a lump of rock of gold in your hand. Now, it is just purely based on price and supposed to be an inflation hedge historically. So people have been obviously looking for this option rather than just holding a lump of gold in their hand that isn't giving them any income. My question is all of that now about to change? So what happens when we find out this week that perhaps the US moves into a technical recession? So 2 negative quarters of growth, the US economy is actually contracting. At the same time, we have an inflation issue and they're raising interest rates. Is the US dollar going to be as sought after as it has been over the last few months? Is it possible that the Federal Reserve might decide, because of bad data, which we're getting a lot of in the US at the moment? We're getting rising unemployment claims, we're getting rising inflation rates, we've got a weak services sector, and the list goes on, as well as their property market, the number of properties being sold. I mean, you could go on and on and on and talk about the negative data. If the Federal Reserve says we're going to become data dependent, as they like to say, and maybe put, therefore, interest rates on pause, or start to create more stimulus into an economy that is in recession. If these things occur, who's going to be fighting inflation? In fact, if they do stimulus, then they're going to be feeding inflation and making the problem worse. Now, as gold historically is an inflation hedge, all the way down at a level that we haven't seen since 2020, are we going to start to see gold becoming far more attractive? Let's wait to the end of the week, traders, and see what happens.